Okay, let's start. Okay, thank you very much, everyone. Thanks for joining this session. This week, I see there's quite a long list of questions, so maybe we'll move a bit faster than usual because if not, I'm not able to cover all these questions here. And just now, sorry, I was a bit late because I was doing some, some research for this session. There's some good question here that I don't know the answer, so I also need to do some googling to make sure that I give the correct answer. So that's why it took a bit of time. So we started a bit late, but let's start now, yeah? Okay, let's go for the first questions. Elon Musk's 50 billion compensations for Tesla. How is this being expensed? Their profit for 1 year is 5 billion. It will wipe out 10 times 2021 profits. Cannot be not expense. So I think this one really good questions and kind of very technical questions because based on my understanding, like all these stock-based compensations, it is recorded in the income statement. That's why, for example, when we talk about Palantir, we look at their expenses is so high, right? There's all these stock-based compensations being deducted. But when it comes to cash flow, they remove it from the cash flow, and hence their cash flow looks quite nice, right? So, but the questions now is that, how is it calculated? I think this one, I just for the sake of disclosure, I'm not an accountant. So when I study all these financial statements, right, I'm a bit like same with those of you who are not like trained accounting trainer. So I'm still learning. That's why this one a bit specific. So take a bit of time to research lah. So what I found is that I think the 50 billions numbers that was quoted, right, just came out in the news lately because there's some lawsuit ongoing for this package. So this package that was given to Elon Musk was in 2018. So the amount, right, that is quoted on the news is like 50 billion. So quite a big numbers. This is not like Elon Musk, his money investor, and then the money after the share prices went up and then he just become much richer, right? This is not the case. This is actually compensations. Compensations means that this is the money that Tesla as the company pay to Elon Musk. Okay, but you need to understand like the details, like what does it mean by the payment, right? Okay, so but let's take a step back and rewind a little bit and go back to like 2018 because this was when the package was announced. So 2018 CEO Performance Award, 100% pay for performance structure with 10-year term, no salary, bonus, or time-based equity. Full vesting requires about 600 billion market cap increase and a very significant increases in revenue and adjusted EBITDA. So I think this is, I think Elon Musk is quite famous for this because his basic salary is kind of like non-existent, very, very small amount. And that's because of there's a regulation say they have it has to be like minimum payment. But most of his compensations is really depending on the performance. There are two things to look at. One is the market cap of Tesla. And then secondly is some operating metrics that he need to meet now. This table summarizes it well, like what is the package. So you need to like, don't look at these things from 2022 angle. You need to like travel, like do some time travel back to 2018. And from 2018, you look at this table, right? Because when it was announced, I also saw this. I was like, I know like this is like good package as long as he meet the KPI, but then it's very hard to meet because the bar is quite high. So there are two parts here, right? The first one that I said, the first part is the market cap. So there's 12 stock options tranches, right? And then each one equal to 1% of the total outstanding shares as of 2018. You need to understand, as of 2018, that's before the 10S run up, right? So the market cap of Tesla is only like 59 billion. And then he basically need to, cross all these threshold, like the company's market cap, need to cross all these like 100, 150, 200, and so on up to 650 in order for him to like get the number of shares here, which is stated here. This is the cumulative number of options vested. So this is the market cap one. And then the bottom one is the operational milestone. So you see, full vesting requires achieving 12 out of these 16 milestones and all market cap milestone, meaning that if the market cap doesn't increase, right, he will get like 0 from this entire package. And talking about like 59 billions up to 650 billions, we are talking about like he need to 10x the market cap of the company for him to get the full package lah. Okay, so this is the agreement between Tesla board and Tesla and Elon Musk. Sorry. Then the operational milestone, I think there are like 1, 2, 3, 4, 5, 6, 7, 8, right? There's 16. So he need to make sure that like the revenue cross all this threshold, and the adjusted EBITDA also cross all this threshold. So you see, it's very, very ambitious. In terms of revenue, it has to 15 times the annualized 2017 levels. So we are talking about 15, like more than 10x. And the adjusted EBITDA need to like more than 21x annualized numbers, 14 billion. That's why I would say this is a very ambitious kind of milestone for him to meet. But then if he is going to meet all this, right, then I mean the total amount that he will receive is very high. But pay attention to this line here. This is the number of shares that he's getting. And if he get the full package out of this, right, meaning he will get 20 million shares. So 20 million shares, this is 2018, meaning this is before the 5x stock split and the 3x recent stock split, right? So we're talking about 15 times stock split. So if you take the 20.3 multiplied by 15, that's about like 300 million shares given to Elon Musk. And if you take that 300 million shares, right, multiplied by the share price, which is about, let's say, $170, right? That's where you get the 50 billions. That's my understanding. Like this number that's quoted is really just taking on how many shares he was awarded, assuming that these are all vested, right? Take this number, multiply by today's current price. So this is the overview of the package. Now come to the accounting side, right? Accounting, like how does like Tesla account for all this? Because imagine that Tesla annual profit as of now, I think it's a couple of billions. If suddenly you deduct 50 billions, it cannot be profitable, right? So for sure, this 50 billions is not in the income statement. That one, just looking at the surface, we can know already. Then look at the details, right? So I think this is an example I pulled up from one of the website. So, but I won't go through the entire things because it will take too long. But I just want to give like a summary here. But it's okay. I just flash it here. So for those who are watching this replay, right, you can actually pause and then just read out all these details, right? This is page 1. This is page 2. So this is just a summary. And then this is talking about the vesting of the options, what happened, what changed at the balance sheet, and so on. To summarize this is that when companies give this kind of options, and then assuming that the person who hold all these options exercise, right, it will be recorded in the income statement. But the amount that's recorded, right, is not the amount like as if like the total number of shares times today's share price. So how they calculate is they actually calculate what is the fair value of the options at the time of the granting. So I think this one gives a good summary. Let me read it out here. Stock-based compensation is measured at the fair value of the instruments issued as of the grant date, even though the stock may not be issued until a much later date. The fair value of the stock options is estimated with a valuation method such as option pricing model. What is being recorded in Tesla balance sheet or income statement, right, is the amount, the fair values of the options as of 2018. So if you go back to 2018, the market cap is only 59 billions. These options vesting, right, will only vest if it achieve all these milestones, which is like very low probability, right? We're talking about 10x, assuming that you are buying a call options, let's say with a 3-year call options, but say Tesla, for example, now currently $170. You buy a call options with, let's say, like 1,700 strike price, right? The fair value of the option is very, very low. That's why if you do a valuation of it, right, you will get a very small amount, and definitely not the 50 billions kind of amount that is being reported in today's news. So I think that one give a summary is that, yes, it is in the income statement, but it only record the value of the options at the time of the grant date, not at the time of, let's say, when he choose to exercise. So you need to make the distinction between these two. So I believe that for Elon Musk and Tesla case is that yes, it's in there, but it is a very, very small amount and definitely not the 50 plus billion amount that we talk about. So I think that's it for these questions. I just want to pause here for a second, see anyone like you have any follow-up questions on this, or you want to comment on this first topic. Okay, no more questions. I think have been solo talk for like, don't know what, 10 minutes just to explain this one. I think this is very good questions because, these are the things that sometimes we know a little bit, like not too sure, but after do some reading, then we can say that, okay, we are sure of this, right? This is, there's a accounting way, like a gap approach to look at it, but definitely not the 50 billions. And all these 50 billions is always true, like after the fact, right? Like after the share price run up. If today's Tesla price is not 170, it is like, let's say 300 or 400, right? That 50 billions amount will be even larger, right? So that's it for the first questions. Thanks for like whoever submit these questions. Okay, let's go to the second one. Adam Khoo calling market bottom. Other guru says further downside. How is Adam Khoo track record in calling bottom? Is he an early bird? First thing, I haven't watched his recent videos. I know that he has been quite bullish on the stock market recently, given that the share price came down and given that the stock price of the stocks that he liked, right? For example, I remember like Adobe, Meta, and maybe a couple more like he's very bullish on, and the share price dropped so much. And when he studied the valuation, he always think that, okay, this is like a very cheap valuations, and like stock market going like, he called it what, wave up, wave down kind of movement. Hence he said, okay, now it's like down. He just position it and buy the stocks and just wait for the stock market to go up now. So that's his position. Overall, I would say that I kind of agree, like this kind of like commentary saying that, now markets is kind of like very, like how to say, bearish. Most people are bearish now if you look at the momentum and so on, right? So valuations to me looks reasonable. So if you say like now is a good position to enter, I generally agree with this statement. But whenever anyone call for like bottoms, right? Talking about bottoms, like looking at today's price and say, oh, it will not go below either today's price or it will not go below the recent low, right? I think this one is, I generally don't agree with this kind of, bottom, calling for bottoms. I think very hard, because like if you look at S&P 500 or any stock, right? You look at, let's say their 52 weeks low is not too far away from today's price, right? Let's say it only need to drop like 5%, 10%, then it will break below the 52 weeks low, right? So I think this kind of like 5%, even 10%, even 15%, right? For single stocks, right? I think is kind of like quite easy to hit that level, because stock prices is driven by buy sell, and it's always driven by sentiment and not by logic. So meaning that if the sentiment become bearish, it can become much more bearish, right? So all this you cannot use logic to explain. So because of that, then it can always like, just big fluctuation up and down. Then a down fluctuation can always breach the 52 weeks low, right? So I'm not surprised when I look at like, any stocks, right? That always like, oh, we thought that it's bottom, then it create another low. This is like, if you look at the stock market long enough, you will see that this kind of movement is quite how I'll say, quite normal. And then after another 52 weeks low, then it can create another one. It's always like this one. So I won't say that. I mean, I'll suggest refraining from calling a bottoms lah. Yeah. So that's my take on this. And I mean, I just want to slot in some advertisement lah. It has been 2 episodes was out. Me together with Chicken, Kelvin, and Eric, we are doing this like a podcast show, right? And then there's one, this is the one that is presented by Kelvin. Quite funny, technical analysis, right? Coming from Kelvin. I don't recall he did it. He did this kind of analysis. So you can see that for the stock market, it's still like, there's this channel down, right? So up, down, up, down. Now it seems that it's like hitting the like a resistance here and coming down, right? So I think whenever you see this kind of like downward momentum, sometimes it can last longer than than we all expect. So definitely not calling for bottoms, because if you see the bottoms here, right? So it can always fall to, you see, maybe 3,400, 3,500 for S&P 500, right? So momentum, okay? If for those who are trading, pay attention to that. Okay, by the way, if you look at the bottom here, there's this bell and this subscribe here, right? So these things, for whoever that's watching this video, please subscribe. We only have like 200 subscribers here. Need more subscribers. Need you guys help to push out a little bit. Thanks for the subscription. Okay, so just some advertisement here. All right, come back to this. I think this one answered already. Is this the bottom for TSMC? TSMC. Let's look at TSMC. Okay, chat reading again. See, now all the long-term investors go to doing TA already. No, I'm not going TA. I'm really TA. No, I really don't know how to draw. But if you just look at the patterns, right? I'll say that, you know, there are people who look for this kind of like support, resistance, and they'll say, whoa, there's a support here, it bounce here, you see, so it becomes like a bottom here, right? This one I'm very skeptical one. But I would say that this you see like two green bar here, definitely there's some optimism, right? I think for both the market because of the inflation's coming down, that's one. Secondly, for TSMC, I have to mention that Warren Buffett recently just bought into TSMC, right? So judging from the size of the investment, 4 billion, I kind of like, you know, like have quite a high confidence that this purchase was made by Warren Buffett and not by his assistants, like Ted and Todd. So given that Warren Buffett is the one that buying, like if the price fall to, let's say, close to, let's say, between $60 to $70, I'm not surprised that he will keep adding. So you see, when he likes a companies, for example, like the Occidental Petroleum, like he tend to accumulating as long as the price remain low. So it's just a valuation, right? So to him, this valuation he's already buying. If it falls, I won't be surprised that he will continue to buy, right? So that alone will provide some support, because we all know that Warren Buffett is very cash rich, right? So that's one thing to watch out for. So I'll say that call it bottom. You see, I won't call it bottom, but stamp of approval from Warren Buffett, I would say that's a yes. That's with the assumptions that this was triggered by him and not by his assistant, because if it is Ted or Todd that make the purchase, right, they probably don't have so much cash to buy, because each of them only manage about, let's say, $20 billion, and 4 billion purchase is quite a sizable amount. So that is looking at the stock price. Secondly, is looking at the valuations, right? So if you look at TSMC, just look at a simple measure, which is a PE, right? You can see that before the COVID run up, right? Their PE, when it was low, it was about, like, let's say 15. When it was high, it was between, like, let's say 20, right? 15 to 20. So now it's already, like, at about 15. So I'll say valuation wise, you don't have to time it perfectly, like buy exact bottoms, right? If you like the companies, valuation wise, I think that is quite attractive at current price. But one thing to note for is that they already communicated that the 7 nanometer process node is already, like, there's drop in utilizations. So I would say that for 2023, especially the first half of 2023, right, please, for those who investing in TSMC, please be prepared to see that the results, right, won't be as good as 2022, because, all these orders already come down. I think in terms of growth, they will slow down now. But in terms of the cash flow, also they already like cut back their spending on capex. So I think cash flow wise, probably will be much better than 2022. But looking at their growth, their revenues, and so on, the growth will slow down. This is like for sure. This is like demand slow down already. So knowing the risks, knowing the situations, if you like the business, then invest with me. If not, then don't buy just because of Warren Buffett. I don't think this one makes sense. You need to really understand the business in order to invest. If not, you look at the result, it's like, how come last year the growth so high, now suddenly become like no growth already? Is the growth die down already? You have these kind of things, especially if the price become weaker, right? So it's very hard to, join in with other investors without knowing the business. So I would say spend some time to understand. If you like the business, invest. If you don't like, then stay away. Okay.
Bunti, I have a question. Is there any other company that can make what TSMC is making? I from what I know, only Samsung can make what they're making. Am I right to say this?
Okay, so if you look at TSMC business, right, they are what we call foundry. So they don't do design, they only do manufacturing. In terms of manufacturing, there's matured process nodes, there's advanced process node, and so on, like the nanometers, like 3 nanometer, 5, 7, 14, whatever, right? So for the matured one, there are quite a long list of foundries that's producing. Say, for example, Intel also still producing, right, for the matured nodes. So there's quite a number of players there. But for the advanced one, right, talking about, let's say 3 nanometer, 5 nanometers, right? Right now, TSMC only have one competitors, which is Samsung. Even Intel is not there because they kind of lag in terms of their process nodes. They want to be there, but they are not yet there. So we're talking about like 2+1 kind of oligopoly situations. SMIC, I think they also like they are not going to stop now. They're going to try their best to enter, and probably for the advanced process node, we will say 2+1+1. With the +1 is Intel and SMIC, right? So advanced process node is really like monopoly as of now. Samsung, I think they have some problem with their manufacturing, also with their yield and so on, right? So in terms of technology, they are not that behind. It's just that at the yield that TSMC is producing, Samsung is still behind. So that's the current situations for the advanced process nodes. And that's the advanced process node is the one that is like they have full order. So they will have like 100% utilizations. But the 7 nanometer, which is like not here and not there, this is the one that will be underutilized for early next year. Either late this year or early next year.
Thanks. Just one more question. Who are their clients? Is it like NVIDIA? Is it like NVIDIA will design the chip, then outsource to them to manufacture?
Yes. Actually, if you look at their largest customers, right? Okay, out of what I remember, Apple, NVIDIA, AMD, Qualcomm, even Intel also using them. So I think these are the couple of big semiconductor companies that outsource to TSMC, and most of them are like like the fabless companies. So for example, like Apple, they only design, they don't manufacture, right? So they pass it to TSMC. Same for NVIDIA and AMD. But sometimes all these companies, right, it's not like they have to pass to TSMC. For example, for Apple, it is exclusive kind of agreement, meaning that Apple only use TSMC. They haven't passed to Samsung before. But players like NVIDIA, I think in the past, they sometimes place their orders with Samsung, sometimes with TSMC. So it's like there are two different, like how to say, the value chain, right? Here is the design, here is the manufacturing. Manufacturing, Samsung and TSMC, right? Then the design is like all these, like quite a number, a long list of fabless companies. So they will just pass over to all these foundry for them to manufacture. But the big one definitely is like AMD, NVIDIA and Apple. These are the big one. I think Apple is the largest.
I see. Thanks.
You're welcome. Tencent invests in a lot of equity like Tesla, Snap. Cannot find the list in their annual report. Where to see what they invest in? Official source. Okay, these questions, right? I also have no answer. So I asked my friends. And then I noticed that there's no official source. In fact, Tencent didn't really list down this maybe in their annual report. I don't recall that there's no like detailed list of their holdings. But if you do some Googling, you may able to find. I believe these are the, Tencent didn't like give the list, right? But then for the companies that they invest in, for example, like Snapchat or Pinduoduo, right? Maybe from the investee companies, they have disclosure on who are their investors, right? So I think there are people who pull all these resources, put all this information and put together. So there's some data on this, but there's no official, like every quarter updated kind of information. So I don't know, like in terms of official source, the answer is no. Okay. So, but in terms of what they are owning, right? There's some, like these investment banks, for example, like Morgan Stanley, they they give research, right? Sometimes you can see that there's some disclosures given. This one is quite a latest one. So it's November 16 from Morgan Stanley. So there's one table showing how they do their valuations. So you can see that Tencent, they value their core business 17 times PE, so 315. But you can look at this. There's a list of companies. These are the big one. I don't know what, I believe the top, the complete list, right, is much longer. So they have investment in, I think the big one currently is Pinduoduo and C Limited, and then Kuaishou and Neo. So these are the list here. You can take a look. Yep, that's from the Morgan Stanley. Yeah, that's a question on Tencent. I hope that answers your questions now. I tried my best already, but we don't have official source now. Okay, then I want to comment on Tesla, because I also remember in 2017 they invested in Tesla 5%. But what I understood just yesterday was that I asked my friend, they shared with me that actually they don't like own a sizable stake in Tesla anymore. It's like about like 0.1% only. So probably they already, like, based on that information, they already sold out Tesla. But the question is, I don't know when they sold out. And I don't recall this appear in any news. So they don't, like, I think we should treat it like Tencent no longer own Tesla given the small stake now. So when they sold it, that's the big question mark. Anyone know, please like share with us either in the Telegram or leave your comment in the YouTube comment sections. Thank you very much. Try to crowdsource some information here. Okay, that's for this one. The second one is receiving Meituan odd lot shares from Tencent. Anyone buy or sell odd lots from Hong Kong before? How is the spread and procedure? Okay, this one I can share a bit of my own experience, because I own Meituan in the past. No, I own Tencent also. So I think the recent experience was Tencent just distribute JD shares, like they not money, like they really distribute shares. And the Tencent that I own, right, is the one that's listed in Hong Kong Exchange. So I really get the dividends in the form of shares. So it is odd lot. So I think this one, the general kind of understanding is that you have to contact your brokers, because I think this one, in terms of the arrangement, right, is depending on the brokers. I believe some brokers even they will just cash out. I won't be surprised on that now. So I would say reach out to your brokers to understand how's the arrangement. But for me, when JD was distributed, I got the odd lots. Then I contact my brokers and they told me I have to call. Okay, the one that I'm using is IBKR, and I have to call IBKR Hong Kong, if I remember, and then ask them to trade on behalf of me. So the spread, basically, when I call them, right, I just say, okay, I have this like odd lots, right? I want to sell. And they look at the price and they just quote me a price, which is like, in terms of the amount, not too far away from the live prices, but definitely is somewhat, it's like a couple of percents below. I won't call it like a good spread. And I actually don't care anymore, because it was like a small amount. Because if you hold the odd lots, right, it will be very hard to dispose later. So to me, it's like, even if they do a 5% haircut, right, I would just say that let's do it, just sell it and give me the cash. So that's what I did. There's also fee, because of like we make this phone call. I think the fee is somewhat higher than if we do the trades over the the apps. So I think the fee could be also higher, but also no choice, right? So I just do it now. So over the phone, call to Hong Kong and get it done. So this was my experience with JD. I believe for Meituan is something very similar. So yeah, that's what I know. And given that this is Tencent shares that I own listed on Hong Kong and I'm using IBKR. So you really need to ask your brokers on what's the arrangement. Okay. So that I'll put a stop here. I hope that this is helpful to you. Anyone want to comment on this? Like, do you have a somewhat different kind of experience or some other brokers that you're using? Happy to hear also. See earnings sometimes compared against last year, sometimes against last quarter. Seem dishonest. Is this not normal? And what Buffett says, dishonest management. Okay, these questions, right? I would say I agree with your sentiment when it comes to companies kind of like cherry pick what they compare to, right? Because I would say the norm, right, when you look at all these comparisons, right, usually I think the standard is that they should compare against the same quarter last year. I think the reason is that if you look at like financial for quite like majorities of the companies, right, they have this like a cyclical, like every quarters, there will be quarters in the year, let's say every Q4, the result will be higher, and then Q1 might be slower. There's this annual cycle. That's why if you compare quarter to quarter, sometimes, it's very, very weird kind of result. Like, for example, especially e-commerce, right? Q4, like companies like Alibaba, they have all these Singles' Day and so on. So if you compare Q1 versus Q4, for sure, the number is negative one. So negative doesn't make sense to do this kind of comparison. That's why I think there's like a kind of like unspoken kind of rules to say you should compare against same quarter last year, just because of this, right? So whenever companies cherry pick, sometimes they compare the previous quarter, sometimes they compare year on year. Sometimes I do feel that, okay, what are they trying to do, right? Is this something like cherry picking and so on? So I would say that whenever you see this kind of pattern, I would say please be careful. Like be more skeptical on what they are trying to present, because from IR or what we call the investor relation perspective, right? They always see this as like, some sort of marketing. They want to present a good picture of the company performance. Hence, some sort of cherry picking. It's not like they lie to you, right? It's just that they try to, make a change your perception or try to convince you that they are doing well. So I think that one, you need to be more careful. Dishonest or no, I think this one, I won't just look at one chart and just draw a conclusion to say, they are dishonest. I won't be that extreme now. Okay. Then secondly, I would say that, like whenever you look at these charts, right, they always show like, last year, this year, then increased by 20%. I would say just looking at 1 year kind of comparison usually won't give us a good picture on how they are doing. I would say if you are serious in terms of like investing in the companies, and if you are serious enough to have a sizable kind of stake in single companies, right? Say, for example, you invest more than 20, 30, or even 50%, right? You really need to, take a spreadsheet and then key in your number, at least look at the past 2 or 3 years and just understand in the past how the company's performance every quarters, right? You need to see the trend, the long-term trend, to understand where are they heading. You cannot just look at like 2 quarters, then you say, I understand the company's performance. I think it's definitely not enough. So if you do your own, taking the data, put into the spreadsheet and draw your own chart and just looking at the hard data and try to make sense of the metrics, right? All these, companies' presentation, they are not able to fool you one, because you probably will understand more than them, And then sometimes you can even spot some errors, or you can spot like small detailed things that they don't disclose in the past one. Say, for example, right, when I pull out Alibaba numbers, right, I can observe like some numbers. For example, they always say, the cash and equivalent plus short-term investment is this and this amount. And this amount, right, how they compute it, right, what is being included, sometimes also change one from like they can keep the same approach for 3 or 4 or 5, 6 quarters. Then suddenly they will include something else. And after you compile all this, you will see that some funny things, and sometimes they just change the approach. And it is not wrong, right? Like they do this kind of changes. It's just funny that, how come they change and without like explicitly explaining that, now we include this, in the past we haven't included. So all these small changes, you really need to do some detailed analysis. Then you will find that, how come, are they trying to hide things or not? I think stuff like this, the details, you only appreciate if you do your own digging. So that's my take on this stuff. Anyone else have similar? I think, don't know, Bunsong, maybe you have more experience dealing with, Singapore IR. Are there any fishy things that you have seen in the past? Any story to share?
Not really. I just had a quick look at the report on sec.gov for C Limited. I don't think they are trying to they are trying to compare differently from what other people does. No, they also compare quarter this year versus quarter last year due to seasonal or cyclicality of their business. Like, for example, C, probably their business will be better during Christmas period or just say for example. So I don't think they are trying to manipulate their numbers.
No,
So I'm not too sure who the person who asked this question, right? I'm not too sure what they are talking about.
no, definitely there's some table. I've seen some table compare against Q3, some compare against Q4.
Let's say this is third quarter, right? Obviously, it's third quarter. So if you're going to compare this year versus last year third quarter, that's fine, which is what I see right here. But when they talk looking at balance sheet comparison, like, oh, this is our cash this month versus last quarter, then that's valid. It's valid to compare last quarter with this quarter. We're talking about balance sheet items. So I don't see a problem.
Let me show. So this one, they compare 3Q versus 3Q. This is fine. And then this is like showing 3Q. This is, I think, also fine. I think there's one that I saw suddenly missing one, like from another one. I think it's this one. This one is the infographics, right? So you can look at this, right? Q3. Yeah, I think this is the one, right? You can see that suddenly Q2, Q3, but this is cash and equivalent. So this is e-commerce. I think this is the one. So you see the Garena numbers, right? So suddenly it's like, oh, Q2, we're comparing against Q2 already. Because if they compare Q3, right, I think the result will drop a lot more as compared to Q2. I don't know. It's just that how come it's like not standard at all? You see suddenly Q2 already here. Like why is it the case, right? Whereas here is Q3. So I don't know, like please be standard, right? So that's just the general view. And I can say that if you look at Palantir IR, their slides, right, is even I would say even worse. Whenever I look at their IR, the slides presentations, I'm a bit lost, right? Like how come like some numbers that they're showing for this quarter, they haven't shown in the past, and then those that show in the past, whenever there's good result, then when the result is bad, they don't show anymore. So it's very cherry pick, especially when they draw the charts. I think that's also one that I noticed. Okay, so just a general view. Okay, don't take this as like a buy or call kind of advice. Yeah, it's just that whenever we look at this, there's feeling, right? It just describe the feeling on it.
I think most of us should depend on the 6K instead of looking at presentation slides. Presentation slides are always going to look good or look better, but just a short word, it's digital entertainment number, so I don't think it's that bad to compare last quarter one, because I wouldn't think digital entertainment would be a big deal as in terms of cyclicality.
Yeah, but this one, the thing is, this is their cash cow. So without the digital entertainment, they are burning a lot of cash, right? So if this one slow down, like we don't know what happened in Q4, right? If this trend continue, there's a little bit of worry. Shopee side, I really don't know like can they really flip to positive that soon or not. So that's the concern.
I think the market is cheering out the price because they exhibit symptoms of cost control.
Okay, I'm not going into details on C Limited. By the way, there will be presentations together with Jay, which yesterday we talked about C Palantir. The next video is with like we're talking about C in more details. Maybe after I release that video, maybe next week we can discuss about this. Okay, let's come back to the Slido. Okay, and this is done. Has there been a case in history where investors lose all their shares that is held in a broker's due to one reason or another, either in SG or overseas? Wow, talking about history, this one I really don't know. I think for brokerage, maybe like I'm not aware, I would say that. But for overseas one, there's this famous club things, right? Like Singaporeans investing in Malaysian markets for some kind of arrangement and then lost money. I think I would say you can do some Google and read up. I can't explain because I may read it in the past, but I don't recall it. You can just do a Google search CLOB. I think you can find something on it. Or anyone else here like have some understanding on what is this club about? Maybe you can explain a little bit, like just for us to understand.
I think this question was asked likely out of this FTX Contagion thing. where your assets parked under the broker could be at risk when the brokerage goes down. So I think this question is asking around that line.
Yeah, I would say that, let's say, okay, I have quite sizable positions in IBKR, right? So if you understand IBKR, they don't have this kind of like CDP kind of things in Singapore, right? So basically, when I invest in IBKR, my shares is actually in IBK in an entity, like a custodian entity, still under IBKR. Everything in one like group. So say for example, like IBKR pool or FTX, right? My money's all gone together. It's the same thing, one. The difference between FTX and IBKR is that all this, traditional finance, right? They have went through, crisis in the past, and then fraud case in the past. All this happened, and then the regulations has been like very, very tight regulation ongoing. There's all these audits that's ongoing. Basically, it is very, very hard for all this exchange to pull something like FTX. That's one thing, because regulations is already in place. Secondly, there's some sort of like insurance also. I can't recall what's the name, the FDIC or whatever. That one, there's also insurance subject to certain number of like, there's a maximum limit that they will pay up if exchange or institution go under. So I think there's some assurance on that also. But other than these two, in terms of mechanism, technically, can they go under or not? I would say, yes, they can. But if you understand companies like IBKR or even Charles Schwab, right, you're going to understand their business and go and understand their reputations. These are the institutions that is like how many decades already they went through the market stresses, and yet they are still around, right? I will argue that their reputations worth a lot more as compared to what they are doing. So it's all about trust in all these systems, right? That's why I feel at least comfortable to put my money in there. But if you ask me, like, for example, if I have, let's say, a couple of millions, would I think about like diversify across different exchanges? I will say yes. But right now, I'm not that concerned, given that, regulations is there, and then there's all this insurance. So, but if you understand crypto, I would say that the good thing about crypto is that you don't need to trust this kind of like reputation and so on. For example, if you own Bitcoin, there's this community, everything, hard wallet, you own it yourself and so on, right? You actually like Bitcoin or crypto, that's another way of doing business that doesn't count of this kind of trust. So that's even superior as compared to you have to trust all these financial institutions, right? That's one thing. That's the good part. The bad part is that the weakest point is always at the exchange, because exchange is centralized, especially we're talking about FTX or Binance or Germany, and all these are centralized exchange, right? Centralized exchange is good in terms of like, they are very fast. They can pull all them together. Like I mean, they can provide you a good UI, UX. But the bad thing is that that's the weakest point. If they fail, right, then we have this kind of FTX situations, right? So I'll say that for me, right, my approach is if I want to buy, I will still go through the centralized exchange just for practical reasons, right? Because you do that, you can just put in money, you buy. And then after that, for storage purpose, I don't store with the exchange, right? Why should I let them keep my key, right? So I'll just park it in the cold wallets. That's it, right? So I think right now, I would say that I think in the past, people, if you watch all the old TCSS, there have been people asking me, do you put your money with Holden on or these kind of names? I always say that I don't. Like in fact, I recall I shared in the session, I say, yeah, for saving, for liquidity one, just park with, like all this DBS multiplier or OCBC. I think these are the account that can give you like liquid and safe, right? The others, crypto saving platform, I'm kind of like skeptical one. So I would say that if you really want to hold the coins, put in cold storage, and don't be bothered about all this, like staking, because the exchange is that they give you like 10% yield, right? Then you give them their coin, the key. I'm not sure whether this is like a fair exchange, like you need to say that, okay, if they give you 50% per week, let's say 10% per week, you can at least say that, okay, as long as they remain solvent for 12 months, then I get back my capital, then it's fine, right? Even if it's a Ponzi scheme, you can still say, oh, they only need to last more than 1 year, then I'm fine, I get back my capital. But for, let's say, a 10 or 15% kind of yield, and then suddenly they just need to do a rug pull, then your monies are gone. I would say that not you shouldn't do that. For crypto, just put in cold wallet. But for brokerage, come back to this brokerage, right? I mean, if you invest in US, there's no CDP kind of things, right? Then if you have some concern, then you just park in 2 or 3 different companies. I think that's the way to it, right? So yeah, that's all I have to say. Next one. What's your view on crypto Contagion? I think it's going through a cleansing phase. Good ones will say things get restarted and we go again. Thoughts? Yeah, Contagion, I believe this is still the case. When FTX, okay, it's very different if you look at, say, for example, 3AC go under versus Hodernut go under versus FTX go under. The reason is for 3AC, I think they are like a hedge funds, right? So there may be some, contagion, I don't know, depending on their positions, right? I don't think that's that big as compared to FTX and Hodernut is the same. FTX, right? They are not just like a hedge funds, right? This Alameda Research, yes, they are hedge funds, but FTX, they are the exchange, they are the how to say, people treat it like maybe like a saving platform also, right? And they partner with quite a number of other institutions. Some institutions might be in traditional finance space also. So when talk about like Contagion, right? Say for example, there are crypto platforms that partnering with them, right? Then let's say if their money's just somehow parked with FTX and FTX just rug pull, all these small players, they might go under and all this might spread, And right now, FTX collapse is still like, we're talking about how many, like not even like 2-3 weeks, right? All this Contagion, sometimes it can take a couple of months to play out. So I wouldn't be surprised if there's more like crypto related companies go under in the next couple of months just because of all this Contagion effect. So I would say please be careful. If you are not comfortable, I would say especially don't put your money in centralized exchange for now. If you have money in all these saving platform, probably good to pull it out. And then I think just do whatever you can to protect your money stuff. That's what I would say. Anyone else want to comment on this Contagion? Talking about contagions, right? Let's say if it spread to traditional finance, right? I think could be ugly also. But as of now, I think not as serious. But in the traditional finance place, right? There's some dependency also. For example, like Robinhood, they also FTX also invested in them, right? So after all this bankruptcy filing and so on, I mean, now Robinhood also have one less, companies that funding them, right? So I think, all these have some impact as well. So yeah, just be careful. Okay. So, okay, let's continue. Any interesting stocks to keep a lookout on for the SGX market? Okay, I surrender on these questions. Boon Song or anyone else you want to comment on this?
For me, I would keep an eye out on REITs. REITs have recently bounced. Yeah. I mean, I don't know whether it'll go down in future, but yeah, I would keep my eyes peeled for REITs. Yeah, because they are battered down now. So yeah, I think this is an opportunity to pick the good REITs out. Pick some good REITs. Add some good REITs into your portfolio.
All right.
Boon Song, what about bank stock in Singapore? Do you think it's a bit overvalued now?
Bank stocks, I won't say that they are overvalued, but I wouldn't say they're cheap also. Yeah. So yeah, that's why for me, I'm looking at REITs. Yeah, because I feel that REITs are now at a so-called, they are battered down. So that is when I would want to pick them out. Pick them up. But banks, they are not cheap, but not X, in my opinion. To put things in perspective, I think the EPS for DBS is around 3. So if you look at the P now, it's not really high, but it's not low. Yeah, I think it's around 12 PE 12. Yeah. So I mean it's not, it's neither high nor low, lah, see. PE 12, yeah.
By the way, just now is Mr. A speaking, not Boon Song. So just want to be clear. Boon Song, you have any comment on this?
Not really. I don't have any significant purchase in SGX stock recently.
Yeah, Boon Song is more focusing on Hong Kong exchange, right? More fish in Hong Kong exchange.
No bad news lah. There's no bad news. Maybe the only bad news stock was Yangzijiang Finance, and that one is already, my portfolio already had too much risk riding on China recovery. So Yangzijiang Finance is one of them. So I wouldn't put too much money, even though recently the CEO said something like the assets, that the stock price is undervaluing. It's very undervalued as compared to their assets. But that I don't think there's any interesting stock in SGX at the moment.
All right. Thanks. And I'm not sure who's asking this question just now. You want to comment anything, any companies that you are looking at, or you want to bounce some ideas? Okay, no. Okay, I really have no comment on this, but just for disclosure, I do have some STI, and exactly is STI ETF. The one bought some time ago is in my SRS account. I didn't touch that, but I don't know if I'm going to touch that. I probably will sell those and buy the companies that I like, which is mostly in US or even Hong Kong, right? So that's talking about STI or SGX market. All right, let's move to the next one. US S&P 500 from 3,500 to near 4,000. Bootstrap rally or market bottoms? Resist buying even more, but now having a strong FOMO feelings. Mr. Fu, yeah, I saw you are here as well. Thanks for asking these questions, but then I need to give how to say expectation is that these sessions, right, we don't talk about technical things and we don't do trades, right? So when talking about all this, I think you might be looking for some sort of like a technical kind of explanations, looking at chart, studying momentum, see whether we should trade or not. So I can't do that because I really sucks at market timings. So quite bad with that. Yeah, but just now I talked about the charts, right? Like the one that Kelvin showed, right? So you see there's some sort of like downward channeling. So I think I believe even for those who are doing TA, they might say now it's not a good price to enter. You want to be more patient, waiting for a better pricing or a stronger kind of evidence to show that indeed market is bottoming. For now, you can see that the downward channel is still there. So why fight with the markets, right? That's what traders will say. Okay, I'm not a trader. I better don't comment too much on this. Okay, able to give some explanation or introduction on Bitcoin or ecosystem for beginners, or give some trusted sources where to study Bitcoin, doing this with open mind. For this one, right, I would say, I think there's, like this type of sites, right, like by Binance Academy. So I think they have some courses, and then you can go to their courses and then just go through their all this, learning. They are prepared and explain in a simple and easy way. Sometimes I think in the past when I do some Googling, they lead me to their sites, and then when I read it, it's also quite easy to understand. At least these are the surface understanding on what are crypto and so on. I think this is like a first step. Then of course, secondly, that's not enough, right? You have to try out yourself, try to understand like how the hard wallets works, and then try to pick a couple of books to read about Bitcoin. Because Bitcoin topics, right, there are two sides you need to understand. One is on the technology front, like you need to have some basic understanding on all these, what is mining and so on, just to understand like why people say, okay, like the technology behind the blockchain, all these things. Then secondly, you want to understand the monetary policy as well. Like when people say there's this, don't know what, 21 million Bitcoins, why cannot be more and so on. Like how will we impact the monetary? How is it different compared to the current fiat system that we have? So you need to have some understanding on the fiat monetary system, and also some understanding on the economy and what is inflation, all these things to really understand like why people are bullish about that crypto, right? So all this, I would say, once you understand all of it, right, you basically have to study a lot of things. But this is not like you take 1 week and then you become expert, right? I would say it really takes years to understand. Even 1,000 steps is start with the first step, right? Which is like start from the simple one, go to wiki pages and read some things. I think that's a good start now. So I don't know who is asking this, right? You could be, kind of like if you really have zero idea, I think these are the couple of places that you can go. And if you want book recommendation, just ask in the Telegram group. I believe there will be people able to assist on this. Okay, let's move on. Where to find official news for HKEX counters? Cannot find on HKEX website. Similar like SEC and SGX website for official HK counter announcement. Wow, I really don't know this. I pass it to Boon Song. You want to comment on this?
Yeah, I can help. So I just share screen, okay? So let's say if we were going to maybe Singapore stocks under security company announcements, okay? So every single thing is actually listed out here. So let's say if you are, this is not a buy recommendation. So let's say if you go to Yang Zhejiang Finance, you can see all these share buybacks and also announcements for earnings, which will be coming soon. So this is SGX, is very simple. But when it comes to Hong Kong, right, there are two places you can either go through the Lei way. So let's say if I were to look for a stock, maybe Tencent, okay? And then I can just go down and say view all Hong Kong X news. The actual site is actually this. So you could actually go here, type in this, press search, and you see all the announcements, share buybacks, issue of Meituan shares. But really, if you are interested to see whether the directors have been buying stock, you have to go to this separate section here. And I believe it's 700. Yeah. So you could see the complete list of substantial shareholders, as well as whether there's been insider purchase by directors. As you can see, the most recent one is this one. So if you click in here, right, this is a little bit hard to read, but usually we just compare these two numbers and you can see whether it's a purchase or a sale. In this case, it's a small amount of sale. That's about it.
Thanks a lot. I haven't paid attention to HKEX in the past, so I also don't know that much. But thanks a lot, Boon Song, for walk through with us the steps. So for who's asking this, right, you can just follow the steps. Okay, let's move on. Which guru, good, honest, mankind, similar characteristic to Buffett to follow on Twitter if you want to get good information on Bitcoin? Why so many Bitcoin questions? I would say for Bitcoin, right, I would say, okay, for Buffett, it's different, right? Buffett, he's investor. So, and he's very generous in terms of like sharing his knowledge on companies, on how to invest and so on. Bitcoin, I won't call it like investment, Bitcoin, it is a mechanism, like a ledger kind of mechanism, and people use it to store value because like what Bitcoin is just a distributed ledger, right? So I wouldn't say, please don't treat Bitcoin as like an investment. That's why I can't recall anyone that you can follow when it comes to like crypto related kind of investments. So I would say no. But on Twitter, there are quite a number of people who provide good insights on like crypto news and crypto related insights. But I'm not an expert on this. I probably don't comment too much. But I think in terms of like communities, right, like Bitcoin, what is this? It's essentially just a community. Like you can see Bitcoin community, Ethereum community. You have to join their community to understand what are the projects and what's the belief behind these communities and what they are fighting for and so on, right? This one, you really need to join them, understand what are the talking points and so on. So I would say don't look for Google. If you are into Bitcoins, you really need to really take all this under your control. For example, this cold wallets is under your control. You really need to all into the knowledge about how all these entire things operate, and don't just see Bitcoin like a shares. So that's my take on this stuff. So no recommendations here. Anyone want to comment on that questions? I don't know. Anyone like you have any things want to share or not? If not, we continue. Okay, no. In current Semicon space, which company can potentially challenge ASML and TSMC for their moat? How durable their moat? Will it they may become a Kodak, Yahoo. Okay. I would say that for ASML, right, it's quite specialized. They have DUV and they have the EUV. I think DUV wise, they still have some competition, but very little. But for the EUV one, it's like complete kind of, like monopoly. Like there's no other companies can create EUV. That's why talking about who can potentially challenge them, I would say as long as under current way of, lithography, right? If you don't have like a totally new way of doing things, right? Just enhance based on what currently have, right? SML is that there's no competition at all. But all these things, right, is like if you talk about like 3 years, maybe even 5 years, right? It's very hard to have like complete new way of lithography. But if you just look beyond 10 years, right? All this technology change over time, and beyond 10 years, anything could happen. Like they can have a totally different kind of process to produce chips, right? Which can entirely skip whatever ASML is producing. So this kind of risk is definitely there. But if you talk about like EUV specifically, like who can produce EUV as of now, there's none. And then I'm not aware if there's any company trying to do that also, probably also none, except for maybe like Chinese companies. If you ask me, like Chinese companies, are they near to EUV or not? Currently, no. But, with the monies that China government put into the sectors, can they create something in 5 to 10 years time? I would say no, right? I mean, it definitely the chances or the probability is there, right? So, but it's very hard for me to comment because I haven't studied like their progress when it comes to lithography. So that's on ASML. Comes to TSMC is that I think similar comments is that if you talk about like near term, 3 to 5 years, right? They are still competing with Samsung, and probably Intel will join as well, probably like three-way competitions, right? But looking on the technology alone, I would say that TSMC is still leading, especially on the yield. Like this is the second time I mentioned, right? Their yield is higher. When your yield is higher, right, that means it's more economic to produce. Like you can give the same thing, but your cost is lower, right? And you can price at this cost. Samsung price at the same cost, then maybe they're loss making already. So that's how important the yield is, right? So that's on like 3 to 5 years period. But if you look beyond 10 years, can you say that TSMC, in terms of technology, they are leading? It's not a sure thing. It could be that the whatever R&D that Samsung is doing now, or even Intel is doing now, it could be like 10 years later, suddenly they just like much better than TSMC, right? Is this possible? The answer is yes. And this is not me talking. I'm quoting some words coming from, I believe, is Mark Liu, which is TSMC chairman. So you have to understand this is still a technology sectors. And when it comes to technology, things can change. If you look at year over year, the changes might be like very small. But we're talking about 5 to 10 years, sometimes they can have all this like a sudden step up because of successful in one of their attempt, right? And some like moonshot suddenly just success, and they change the entire way of doing things. Suddenly they can just climb to the top, right? Anyone can do that. So I'll say that even though I like the business, still I have to pay attention to all these like smaller things. Like if there's sign that they are fallen behind, then I might need to like trim my positions, right? So I think this is like need to pay attention to. So this is my comment. Anyone want to comment? If no, we'll move a bit fast. Just take a quick look. Okay, no, we have like not many more questions. Okay. Want to start buy Bitcoin in safe manner without leverage? How or where to start? I don't know. I haven't touched Bitcoin for quite some time. Okay. But where to open? I better don't comment. Now I scared I comment like, oh, you can go through exchange A. Then suddenly next one collapse already. I better don't comment. You can ask your friend which exchange is the like safer one. And then the moment you put money in, you buy, then probably transfer out. I think that's the safer way. Okay. Scared of naming names here. Okay. Let's move on. How come I sometimes find quite curious that like how many TCSS session that we had in the past, right? Master Leong only appeared once, and then like somehow when this like Slido posted, there are like 3 or 4 questions that's asking Master Leong. By the way, my name is not Master Leong. Okay, my name is at the bottom left corner. My name is Punti. So don't ask Master Leong questions in my TCSS. Okay, and then also in terms of the topics that I cover, I would say I talk a lot about like semicon stuff, but then people come here and ask crypto questions. I'm not a crypto expert, you know, so I don't know. There are other places or other groups that is like more concentrating or like focusing a lot more on crypto. Maybe those are the better places. You ask me, I try my best, but you know, my understanding is very surface now. I don't know if other people want to join in, you want to discuss on crypto, also feel free to stop me. Just chip in, just stop me. Okay, no. Next one. Oil price has been in bear market below 200-day moving average for some time. Is energy company like XOM trading at all-time high considered risky? I'm not in energy, yeah. Just look around. Who can help me on this? Anyone in the energy? YCX is not here. Okay, this one, I don't know. You might want to repost this question again, just in case, let's say YCX is here. I believe he will have something to say because he's in energy for quite a number of months already. My take on energy is that it could be a good short to medium term trade. Long term wise, I'm very, very skeptical. That's one comment. Second comment is that now energy, because of underinvestment for quite a number of years, and hence we are facing energy shortages, right, recently. And the prices has, like, if you compare like current price versus, let's say, 2 years back, 3 years back, right, it went up quite a bit. And if you believe that even the current price is sustainable, right, I would say that for all these companies like XOM, right, they can be quite profitable just because of you know, their profits basically come on the energy prices, right? So I think if you are bullish on energy prices and believe that these shortages will last for quite some time, right? Even with current XOM prices, might be a good investment. But my concern is always that for commodities, right, it's always like this one. The reason of the underinvestment, there are 2 reasons, right? One is ESG concern, like companies, they kind of like refrain themselves from putting money into energy. Secondly, is also the price has been weak for quite some time. There's this belief that there's no future in terms of energy, and all this renewable like solar, this is the future, right? So there's the underinvestment that caused all these shortages and the price become high. And the things with commodity is that, you know, high prices, what will they affect? They will actually affect more investment. And people will be quietly invest into energy, and then all this money invested into energy, they will be invested in more oil exploration and so on, right? So all these things, right, like high prices, it will lead to more supply in the future, which then will bring down the price in the future. So the economics of commodities is always like this one. That's why the cyclical will always be there. So whenever there's like cyclical and you already run up, like have a huge run up on energy prices, right? I would say that, let's say talking about like 5 years or longer, I can't believe that price, like energy prices won't go up at this kind of pace, like with what we have been seeing in the past 12 months or you know. So I think that for me, I don't want to bet on commodities and especially this type of cyclical business now. I'm okay with semicon cycle because at least I know what are the companies that's doing, and I know companies like TSMC. There's still some moat with regarding on their, you know, technology when it comes to manufacturing. But for oil, for XOM, like I'm not that bullish in terms of their long term, whether you know, oil prices will stay on this kind of, you know, momentum for many years. This one I'm skeptical. That's my take. But you have to listen to YCX because he's the one that keep advocating for energy for some time. And he's looking things from, I think, some technical and plus some, you know, policy plus like the economics as well. So combination of this, I think it's quite interesting to hear his thoughts also. Maybe when he's here, we can bring this up. Okay. Anyone want to comment? I think Maximus is here. Whether you want to comment or not, I don't know. If not, we move on. Let's move on. Do you know of any Adam Khoo student who is making a living actively trading the market? Considering to buy some courses, switch career, not sure where to start. I don't know. I can only share that I don't have any friend that is making a living by just be a trader. I don't know anyone. I have friends who are traders. For example, they're trading on behalf of their firms. Okay, this one, yes. But let's say those who say, okay, I have some money, I don't do anything, I just trade only, then just take my active trading income to sustain their lifestyle. This kind of situations, right? I have no friends. If you are right, like you are having this kind of like you already like kind of retire and just maybe just trading and that's enough, right? Maybe just reach out to me. I'm happy. I'm really interested to find out more like what was your stories? How do you achieve this kind of like I would call it success, right? Because I believe those who are good at trading, they are really good at trading. I'm not saying that trading is all fake one. I just don't believe I can trade well only. I believe that there's only small minority of people know how to trade well. Like short-term things, what to look out for. I think this is a very specialized kind of skill. Okay, that's my take on this. And I don't know about Adam Khoo courses. I don't know. My take on like whoever asking these questions, right? Even if Adam Khoo courses is good, right? Doesn't mean after you follow the courses, you will do well. I think that's the challenges because those who trade well, right? I can see some pattern on those who can trade well like that. Right? For example, how well are they in taking emotion out and following their trading rules? Very disciplined. I think this one is like just a small subset of people able to do that because I think most people when they do trading is that in the beginning they earn some small money, they earn money. They're following the rules. The moment they lose money, right? They kind of like not able to follow the rules already. They will like just give up the rules or they will do something that is like basically not disciplined enough. And then they lose money. They all the emotions set in. They try to recoup and they try to do risky stuff and then they lose all their monies. This is very common. This is given that they started out the correct path, and the hard part is not to know what are the rules. The hard part is actually how to make sure that your psychology, your mental is still strong under all these market stresses, So I think this is that's why I say it's only like very small minority of people able to do this well. Yeah. So take this as an input. You want to try, you go and try. I don't know. You try trading and then just share with us whether it's good or bad. So that's what I would say. But it comes to Telegram or my channel, this is not my focus. I try to steer people away from trading and to long-term investment because in terms of long-term investment, I do know many people who are doing very well. Okay, this is just by investing in good companies and just right along with the companies and not trading. Trading is totally different things. Okay, let's continue. Punti, you mentioned you were bearish on market outlook about 1 month ago, still maintaining same view? Yes. Short answer is yes. Two reasons. One is Fed is still going to raise the rate, even if they are slowing down. The rate is still quite high. It's quite painful for whoever maintaining margin. So I don't think there's a slosh of liquidity around the market to pump the market up. So if you understand the liquidity is not there. So given so, I think more downside to go. Okay. Secondly is momentum. And this is like a bit of technical side as well. So momentum is down, the chart is channeling downward, So these are the two reasons that I think looking at short term, probably still like, either lingering around or probably down instead of like just rocket up. When market rocket up, there should be some strong reasons, right? For example, like all this stimulus check, like Fed pressing interest rate down to zero, QE, this kind of liquidity, plus investor sentiments that push market up, like what happened during 2020, late 2020 to 2021. Now this phase already up already. So I would say that even up, like what we are seeing in the recent past, right? Probably it's just some, some short covering. Then you just need like one or two more like negative news, then you see it'll come back down again. So I'm not surprised with that. So for those who are investing, given the valuation, I think accumulate some stocks. Don't be afraid of the markets. So, you need to learn how to tolerate with the market volatility, right? So I would say take some time to really be comfortable with the volatility. Start accumulating stocks, start investing, start to learn to be calm even with the volatility. Go slow, don't all in, go slow, really build do it slowly. Like we all getting rich one, don't worry. We're definitely getting rich. It's just that getting rich slowly, don't do it too fast, so that you have to learn how to be emotionally, stable throughout this journey. Now we are playing a game. This game is like, 30, 50 years games, like long-term game. So please be patient, okay? But talking about deploying money, don't say, okay, I'm bearish, then I just withhold, I just park in cash, because you are giving out an opportunity to learn how to take, learn how to take losses. Like all this experience is very helpful for the big crash coming in 5 to 10 years time, So need to learn how to tolerate the market volatility.
Hi, Bunty.
Yep.
Can I chip in some comments?
Sure. Go ahead.
Okay. So I think earlier on there was also a question on has the market bottom, and then there's like a rally, so the FOMO is real. My view is I think it's very hard to pick the bottom. I don't have a crystal ball, so I'm also not sure whether the bottom is already in. But at this point, purely from technical chart, it seems that the market is still bearish. That's for the technical. And for macro environment, I think what you have pointed out are valid as well. High inflation, interest rates, and also a potential recession. And with all the layoffs and hiring freeze, the employment rate may potentially go up in the next 1 or 2 quarters. So with all this in place, I think the market is still relatively bearish, but we don't know whether has the bottom been found. Yeah, and for long-term investors, I think what you said is also I share the same view. Try to put in some money now to accumulate some shares. If you are long-term investors, it basically is to train your mentality because in times like this, the volatility is really high. So if one wants to really wait for the exact bottom, I think it's really, really tough because a lot of analysts from the various financial banks, they can't even pick the bottom. So us as retail investors is even harder. So if let's say you cannot tolerate the volatility, then you have to rethink your strategy. Otherwise, I think buying in tranches is okay. It's okay to not pick the exact bottom. Dip your toes in a little bit, and then if you fall, then maybe buy a little bit more. Eventually, good companies should go up. Yeah, that's my view. Over to you.
Thanks, Jay, for the comment. Yeah, for those who can't really you can't tolerate the volatility, I would say do some asset allocations. For example, let's say you have 20,000 in equities, right? Then probably you go and have like 50, 80,000 into some bond funds just to help out with the volatility. And then when you look at your portfolio, you don't look at just the equity, right? Because you just look at your stocks just go up a lot, right? So what you can do is you package them as a whole, like a portfolio, right? Some fixed income there. And then when you look them together, it's like, oh, now I have 100K stacked in there, probably like 20K equity, 80K bond funds, right? When you look at it as a whole, I mean, the volatility much lower, so you can at least help you with the the psychology side now. So I think that's also one way that you can try. Okay, let's move on to the next one. If I want to invest in ANTA, I actually don't know what is this there. Ning, and what are some of the things to look out for that it don't become another Lukin Coffee? Wow, tough questions. I don't know. Who want to help out on this? Anyone study Lukin Coffee in details? I think it's like some sort of fraud, right? I also don't remember the details already. Okay, so really not able to comment much because I don't have much, like detailed understanding on three of the names mentioned here. But for Luckin Coffee, I recall, right, it is a fraud. And then if you are good with accountings, you can see it. I mean, that's my what I remember that, because they have some sort of interesting things when it comes to how they recognize the revenue and giving out voucher and those kind of things. But okay, I better don't comment too much because I really don't remember the details. Probably you can do some YouTube search and try to understand what happened with Luckin Coffee. Then if we have good understanding on Luckin Coffee, then if it is accounting, then maybe some accounting knowledge can help you prevent these kind of things. But you need to understand that if it is fraud, right, sometimes even with good accounting knowledge also could be hard to avoid, because when we talk about fraud, it's that the person who is committing the fraud, right, they intentionally hide it from you. So even the auditors may not able to spot it now. So sometimes you need to be careful when talking about like how to avoiding like fraud, right? Could be like quite a difficult task. That's why there are people who say even like you are super bullish on one company, you shouldn't like all in into one company, because there are risks that is not like unavoidable one. Like fraud risk is something that you cannot control. And some people, even they are fraudster, right? They can be very convincing. I think we learned it via SPF, right? FTX is a good example. I actually, if you ask me like 2 weeks ago whether I think he's a fraud, right, I can tell you that I don't see him as a fraud. I really like I haven't watched his interview. It's just that the entire package, right, the entire FTX things, right, doesn't give me like a fraudulent kind of vibes, And even so, we are all drug pool. So what to do? So that's my take on this.
Kunti, maybe if I can comment a little bit.
Yes, Chicken.
So I've seen, I mean, I didn't see it in real time, but I studied, it's part of my study. I did it in school. So we kind of did a brief overview and case study on Luckin Coffee. I think long story short, they over-declared a lot of, I mean, it's the standard fraudulent. They over-declare revenue, under-declare their costs. So the company or the hedge fund that actually went to uncover their problem was they literally position people to sit outside the cafe or sit in the cafe and start counting the footfall. So to check back whether the revenue makes sense or not, because they were expanding like crazy in terms of like, they were reporting crazy amount of growth. They were expanding chains like nobody's business, but it was all on the basis that to boost up their numbers, to make it look legit. But I think fun fact is there was a few recent developments around Luckin Coffee. So for those of you who don't know, Luckin Coffee got delisted to over the counter to I think around $1. From then on, Luckin Coffee actually 19x. So it's at $19 now. So for those of you who have the ball, not financial advice, but for those that actually had the balls, they're 19x. So it was riding on the news that actually the fund manager that exposed the Luckin Coffee fraud currently bet on the comeback. So the guy that said that it's a fraud now is betting that Luckin Coffee is coming back. I think based on a few numbers that I can pull out and just Google, right? Luckin Coffee now, actually the biggest competitor Luckin is Starbucks. So Starbucks also has a huge pie in the China market. So Starbucks, I think based on the last quarter, they have around 6,000 plus stores in China. And after the fraud of Luckin Coffee was done, they introduced a new management team. They got in new people, new talents, and tried to straighten the records. Now, I think based on the last quarter as well, Luckin Coffee has around 5,000 plus stores. So it's chasing to Starbucks level. And based on people using the same metric, actually, there are a lot of customers that are growing their user base like crazy. So that is why you can see there is a 19x in terms of share price now. And basically, the market is just voting that they are able to overtake Starbucks in the Chinese market. I think one very key characteristic is also I think the Chinese people is quite patriotic. Like they can boycott. Like so today, if Apple does something stupid to China, not saying they're going to do anything stupid, but if they say that they want to boycott the Apple brand, Apple is going to take a very, very big hit because this is the innate culture of the Chinese people. So that's my perspective on how things are running between Luckin versus Starbucks. Then back to this Ning and ANTA, I think they're all sports brand. They're all big clothing brands in China today. I'm not a deep dive, but I briefly looked at these companies before because I was quite interested in investing in a lot of all these big Chinese brands. I think my only concern is they are you think that they're a good company. I think other investors also know that they're a good company. So they're trading at a very high valuation. I think you just Google, I think Ning, ANTA, or many of all these like Yum China, big China brands that won't go 倒闭 one. Like they're there for a good 10, 20, 30 years. All of them are trading at a PE of at least 25, 30, 40. I think I discussed with Punti the other time before, because I was also interested in the dairy market. They're all trading at high valuations. So I think there's a disparity as well. The international investors look at Chinese tech, they beat them down. But local investors that invest in this kind of local big brands, they're still at sky high valuations. So, I mean, with my own investing philosophy, I won't buy them. But if you're interested, I think you can dig deeper. In terms of revenue, like how sticky is the revenue? I think these companies are nowhere to go. In the next 10, 15, 20 years, they're still here. It's like your McDonald's not going to go anywhere. But at what price you're going to pay and how is it going to fit in your own investment portfolio? I think that's a question you ask yourself. But yeah.
Thanks, Chicken, for the comment. Yeah, times to create some deep dive video on ANTA and Ning. I think there are people who are interested, right? So these are this is it's not a tech bet, right? This is bet on their consumer brands, talking about brandings, because in the past, China companies, I think when it comes to reputation, they don't have a good branding. They are not like, the European luxury kind of brands. Now, slowly, I think in terms of quality, they have been quite good for some time already. Just that when it comes to branding, that there's no, definitely, I think this is something that can ride on if you want to invest in brands and not just in LVMH or Nike, right? So there are a couple of good brands from China that can invest while they are still growing. So I think there are demands on such videos. So waiting for your videos. Okay, let's move on. Where is the resources to read to separate the Microsoft, Adobe, those with still good moat compared to the Kodak, Yahoo, whose moat dies? You're not sure it is temporary or permanent. I actually don't understand these questions. Where is the resources to read to separate, what to pay attention to separate companies like Microsoft to make sure that they won't become a Kodak, right? So that's my take on the questions. I would say the best place, right, is really to be a user. Then you will know whether they are, still in the forefront of the technology. So for example, Microsoft, right, you can try to just use Excel, Microsoft, and then even if, let's say, your company is using Azure, you just try to get a sense of whether there's new products. And then in terms of, let's say, for specific applications that you're using, right, you try to see who Microsoft is competing with, and then you just compare their product offerings. I think all these companies is if they're able to produce good products and then able to enhance the product's distance, put their competition away, right? Really able to come up with good features and so on. I think if that's the case, you will see them before they collapse, become a Kodak, you will know beforehand now. So just need to be pay attention. I don't think you can have some rule-based kind of things looking at some metrics, some number, calculate some number, and you can avoid that. I don't think that's the case. The best way is still try to be the customer, be the user, and judge from it. For Adobe, I would say that there's still some competitions. For example, Canva, right? Canva, I think is still a good competitor, and their approach, right, it's not like they're creating a totally same thing as Premiere Pro or the Photoshop and try to compete, right? They actually try to do it on a cloud-based approach and then very simple way, simple UI. And I do see that there are quite a number of people actually favoring offerings like Canva. So I think there's still startup here and there try to compete with them. I think this is true for Microsoft as well. But you just need to be ask the people in the industry and see if there's pay attention. I think you will see whether they are, still the best one or not. But again, these are big businesses, right? It's not like Adobe only have Photoshop and compete with Canva. They still have their Premiere Pro. They still have all sorts of their offerings. So you need to deep dive into each of these offering and see is there any startup or is there any direct competitors? And if you compare feature to feature, are they still better? And so on. I think can do some qualitative analysis lah. And of course, quantitative analysis, I would say the quantitative is harder because whenever, even if there's slowdown in revenue, right, you can't, sometimes you can't tell whether it is because of the macro situation or is it because they lose up to the competitions, right? So I think this one sometimes harder to judge. But as a user, right, you will know if the product kind of become like bad. Say for example, we have been in Telegram for so long, right? Why no one suggests that, hey, actually I don't like Telegram. Can we please move to WhatsApp group, please? Have you ever seen this kind of like suggestion, right? So you kind of like, once you are the user, you know which one is better, then you can judge whether they are good or bad. So that's why I would say be the users. Okay. Next one. Why is Master Leong so bearish on Tesla? What is the reason? Is it because he's not a car driver buyer or he is just biased? Okay, I have to say, I haven't in touch with Master Leong for quite some time already, and I haven't talked to him about like why is it bearish. But I watched some of his videos. I don't think he is like, like hate Tesla. I believe one of his video he mentioned about like valuation and so on. So you might want to pay attention to the valuations now. And that's my take on his view and could be wrong. So Master Leong, if you are watching this, you want to comment below, feel free to comment. Okay. And there's one question that asks about like, when will Master Leong be invited back to take part in the next TCSS? Yes, Master Leong, if you are watching and you want to show up in TCSS and want to join, feel free. We'll have one special session like just with you, co-host together. Happy to have you here. So I'll ask him, see whether he's interested or not to join us. But again, last round when he's on the show, people keep on typing some negative things and I have to keep on like deleting that. I think this one looks very bad, not on Master Leong. It's look very bad on me, For example, like I invest one guest, right, to my house. And then other people go and throw, eggs into my house, This one doesn't, it looks very bad on me, It's like, at least you need to give me some face, right? I'm hosting this and I'm inviting guests, and please don't do negative things on my guests at least. Okay. On other place, I don't know. It's not under my control. But if I'm inviting him, I really want to say, please be kind. Okay. All right. That's on these questions. Next one. Can I check how do people read on Bloomberg, Wall Street Journal, etc. without paying subscription? Is it by using VPN? Do you know is VPN safe to install on PC? I haven't been using VPN. I don't know about that. On Bloomberg, Wall Street, I don't know. Sometimes, right, I think that there's one trick that you can try is that you just copy the keyword and you just paste onto the Google search, right? And click from the Google search instead of directly click on the link. So sometimes it will work, sometimes it doesn't work. So I also don't know why. So that's my trick, okay? Other than that, nothing to share here, okay? There are some other ways that you can just ask in other forums. Or maybe some people have some trick for you. I don't know whether those kind of tricks is legal or not, so I don't want to comment. Okay. How come after the tech retrenchment, the jobless rate is still so low? Yeah, this one you need to see, right? Because I think when Fed comments about job situations, right? I think one metrics they look at is that how many job postings are still there, because right now there's always supply and demand, right? So there are companies that want to hire and vacancy is there, they are not able to find people. And then there's the other one is which is like people are looking for a job. So the jobless rate is very low, meaning that there are not many people looking for a job because they already have the job, right? So all these people getting retrenched, they can just hop on to another companies as long as the other company want to hire, then they get their job, right? So it really depends on like how much the market can absorb. But I think two things to watch out for, right? The number one is that yes, if you look at Meta layoff and then Amazon layoff and list of layoffs, right? Especially in tech sectors, right? The number of layoffs definitely has increased. This is one. Number two is that I think there are like quite a number of companies that's either pause on their hiring. They say they halt their hiring, right? Or they really just do layoff, right? So if they really stop hiring, meaning that if there are other companies, people get laid off, right? They want to look for a job. There are less companies that are hiring now because of this stopping hiring kind of things that's happening, right? So if this continue, let's say for a couple more months, I wouldn't be surprised to see the jobless rate starting to climb. So I think this is what the Fed trying to do, because after this happened, right, you see there's kind of like a balance in terms of the job supply and job demand. And when this happen, employees, including myself, will find it harder to go and talk to my boss to say, hey, other companies is offering better offer. What should you do? Like this kind of like pressure to the companies to increase the wages and so on, right? So less pressure on the wages means that the economy also will be slowing down, because this is how it works now. So this is what the Fed is trying to do. So they want to cool the economies to bring down the inflation. The job market is something that they have to, induce some winter in there. So we are seeing some pattern here. So some trend towards that. Anyone else want to comment? Okay, so I think that's the situation. Let's pay attention in the next couple of months, see whether the jobless rate will continue to climb now. So as long as still like gradual one, I think it's fine. If suddenly become a big crisis, big recession, and then too many people looking for a job, then we have a different problems already, which is recession or depression problems. How will the regulation in US or Euro or UK affect Amazon, Facebook, etc.? Those antitrust monopoly issues. I think this one is ongoing one. Like all these governments, right? They always want to do something about antitrust just to make sure that big corporates is not too powerful. And in order to make all this antitrust regulation, right, they really need a strong government, meaning that if you have a situation where the Democrats and Republicans both have somewhat similar power, it's harder for them to pull this kind of antitrust law into effective. So that's why a strong government is bad for, business that has monopoly power. So that's a situation. So that's why I would say investors generally like a more balanced kind of governments now. And now I also don't know how to describe current situations, right? Because Republicans now won the House, and then the Senate is won by Democrats, and it is not like a huge margin. And now president is Democrats, right? So I would say it's not too bad. It's not like just before these midterm elections, Democrats basically control like all this, right? President is theirs. I think House is also theirs. So I think now it's kind of more balanced, but it's also not strong enough to say that all this regulation will not be successful. So yeah, that's it. Is cloud overrated? Market seems like pricing good growth for cloud for Amazon, Microsoft, and if cloud disappoints, the price will come down a lot. I would say if you look at the cloud revenues in the recent past, right, talking about recent quarter, right, actually they slowed down already. We have seen that in Amazon, in Microsoft as well. So we do really see some sign that their customer is cutting their budget even for clouds, right? But I would say that the clouds, this trend, right, is not a short-term trend. This one is a long-term thing. So I think there's still a lot of benefits of moving towards moving to clouds. So I think this this trend, right, will ongoing for some time now. So I'm not too worried with that. But talking about whether they are able to go back to 40% kind of growth, I don't think that's the case. We probably will get something, let's say 15-20%. If that can last for like a couple more years, right? And that's good enough already, because if you try to look at their valuations for Amazon and Microsoft, their valuation isn't that crazy. So I kind of think that looking at their growth rate versus their valuation is kind of like in line now. So that's my take on these two companies now. But if Q3 growth rate, right, is like we already slow down, and if you see further slow down, say they down to 10% or even single digit kind of growth for their cloud business, right, of course the price will fall, right? So yeah, when talk about valuation of the companies, you always need to look at two things, right? Number one is that how much money that they are earning, meaning their revenue they bring in, their profit margin. Secondly is how much is their growth, right? So whenever the growth dies down, sure the price will be affected one. So just be aware of that and be prepared. I'm moving a little bit fast now because it's getting a bit too long already. Okay. Where to read which resources to find out which company have monopoly in US and China or Hong Kong? I think this one is a bit like qualitative questions because, there are, for example, like Apple, right? Some people will say, wow, Apple monopoly. Okay. In fact, all the anti-monopoly things you see, Apple is summoned to give for questioning and so on. But if you look at in terms of market share, there's no dominates, right? They don't dominate the markets, right? So sometimes when it comes to like whether they have monopoly or not, I would say it's qualitative and up to debate on. And depending on how you frame it, you can argue they are monopoly or they are not. So I would say no. I think this is long story. I won't comment too much on this. But let's say if you have any points to bring up, right? I was think that this question maybe Mr. Typical Singaporean. I guess those of you here, you might know him. He will have more to comment on this like when talk about monopoly. Okay, I'll skip this. How high of a chance Tesla can maintain revenue growth of 50%? Where to find resources? How Tesla is selling in October, November so far? Go to Twitter. I think Twitter, there are quite a number of people who have good insights when it comes to projecting the upcoming quarters. I think one of the names is Troy. I think he's projecting, but I haven't really tried to understand his approach. But he has some connection, and then I think their connection have some connection, and that's how they pull some informations. I think that's one way to look at it. And secondly, also, I don't know, I think whether you trust all those investment bankers, they also come up with, like some forecasts, or you can take that as a reference also. But for me, I don't really care those too much. I think depending on what you are betting, right? If you are betting on next quarter, then you want to look for these kind of things and you want to analyze it yourself, right? But if you want to bet on the EV, which is like talking about 3 to 5 years kind of trend, right? So I think the next quarter result, whether it's good or bad, to me, is not so important. So that's my take on this. About revenue growth of 50%, this is not proven. There's no law, there's no model on this. This is just Elon talking about like he's seeing strong demand and he foresee that the 50% growth is there. But I want to point something that I think is quite important. That 50%, I am not too sure this is like, okay, it's talking about revenue. It might be talking about like how many cars that they are selling, And this is not talking about like talking about 10 years of 50% growth. I think he mentioned about like want to meet 20 million car a year. And if you work backward, right, I recall the CAGR or the growth rate is somewhere about 30% only. So the 50% is only true for a couple of years and then it will slow down. So just implied for that 20 million numbers. That's number one. Number two is that if the unit growth is, let's say 50% for next 3 years, right? But if they offer a cheaper cars and then the average selling price is lower, right? What it means is that your revenue growth might not be 50%. So please pay attention to that. So there are some details on that. So one thing is average selling price. Secondly is what are we talking about? Are we talking about 50% revenue growth or 50% unit growth? Because these two can be different compared, given what is the average selling price, right? And this one depends on are they going to launch a cheaper price or not? So please pay attention. All right. Next one. Tesla seems like the shares count keep going up. So even if profit is up, seems like also be diluted. Short answer, yes. Okay. Dilution is very simple one. You just look at the outstanding shares. As long as it's going up, it's diluted. Okay. But the question is like, if you are able to get a market cap increase by, let's say, 3x in next how many years, but after 3x, after dilutions, let's say you get 2.5x, right? You still have a good returns, right? So you need to put all this into context one. Okay. So yeah, simple answer is yes, you will be diluted as long as number of shares count going up. Warren Buffett usually read annual report or 10K. Seems like US usually only 10K, not much annual report. I think just 10K alone, there's tons of things in there already. So far when I look at 10K, I think it's equivalent to annual report. I'm not sure about like when when you're drawing a distinction between these two, I'm not too sure about what are we talking about. Because to me, 10K is kind of like the annual report and have tons of information in there. That's my take lah. Then Warren Buffett, what is he reading? He's reading like 500 pages a day. So I will assume that he's reading everything. So yeah, that's my take. This one answered. Last one. Are you a semicon and tech expert? You specialize and have experience in semicon and tech. You seems to know the industry well. No, I'm not in semicon. I'm not in tech industry. So I don't know all these things. It's all me, a retail investor, trying to pull some information and just present only. I'm not expert in this field. But if I know anyone from semicon, right, and I know a couple of people from semicon, sometimes I want to learn from them. I will ask them some questions. And usually those people in the sector, they know a lot more compared to me. And how much I can absorb is really depends on how much I know about the industry. Because whenever you talk to those people in the industry, they are not able to share too much with us. Not because they are not willing to share. It's just that we are not able to absorb because we don't have the necessary basic knowledge to understand what they are willing to share. So the bottleneck is always at our side one. Okay, so that's I will share that. But in terms of semicon, I think I've been researching, watch some YouTube, do some reading and so on. And then once you read, then you will have some, I would say, the surface knowledge. But whenever you go details, you will always like find it like, oh, okay, I find it hard to understand already, especially when it comes to the technical side. So that I will share on these questions. All right. Thank you very much for everyone who has submitted questions. I think that's give us opportunity to share a lot more. And I hope that this is engaging for whoever joining the sessions. And thanks a lot to Boon Song, to Jay, to Mr. A here asking questions. Thank you very much for participation. Always enjoy this kind of session. And this round we're doing quite fast because there are so many questions, right? I don't want to bring it to next week now. So thank you so much. See you in next week. I don't know. Maybe yes or no. We will decide. See you back in the chat group. Thank you. Bye-bye.